Hello everyone, welcome back to my channel. In today's video, I will talk about dollar cost averaging. It is an investing strategy used by many investors. Today, I will focus on dollar cost averaging, its application to 4 types of investors and traders. If you are new to this channel is about easy wealth building, grow your money, retire wealthy, and retire early. So please support this channel by subscribing, like, and comment. If you'd like me to subscribe you back, please also indicating in the comment below, just saying you just subscribed, you want me to visit your channel, and I will do so by supporting and subscribing to your channel. Without any further ado, let's dive right in. So what is dollar cost averaging? Dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a targeted asset in an effort to reduce the impact of volatility on the overall purchase. This strategy removes much of the detailed work of attempting to time the market in order to make purchases of equities at the best prices. Dollar cost averaging is also known as the constant dollar plan. Dollar cost averaging is a tool an investor can use to build savings and wealth over a long period of time. It is also a way for an investor to neutralize short-term volatility in the broader equity market. So how's dollar cost averaging apply to different investors? I give 4 examples. First example is for those who invest in 401k and 403b for their retirement. Those investors, if they decided to put $10,000 per year into their mutual funds in their portfolio, instead of putting the $10,000 on January the 1st, lump sum payment, they can easily divide the $10,000 into monthly equal amount investing or 2 times per month investing into their mutual funds. In this way, they can avoid the market high times, they biting the price, they can averaging costs down, and then buy more shares when the market go down. They don't have to worry about the market downturns or corrections. For second types of investors, dividend investors, they can reinvest their dividends at regular intervals whenever the dividend pays out. They can perfectly using the dollar cost averaging method to purchase the same stocks and ETFs, use the dividend payout. When the prices goes up, they buy less shares. When the prices go down, they buy more shares. For day traders or swing traders, if a stock does move lower in the near term, dollar cost averaging means you can get out of the trade way ahead of a lump sum purchase if the stock moves back up. I'll give you an example. In this example, I use the most familiar Tesla stock. Everybody knows Tesla stock, the wild ride recently. So assume 2 people purchased the same price, the high price on February the 4th at $968. And Tesla stock never went up beyond that price. And then one person used dollar cost averaging down method, and then the other person used the dollar cost averaging up method. I'll show you the different result of these 2 people. First person used the dollar cost averaging down method. So he never bought any Tesla stocks, but he has FOMO. Everybody is buying. So he is like fear of missing out. So he went in on February the 4th, bought the highest high 10 shares of $968. All right. Then the stock crashed at the end and it never went up beyond. But he wasn't panicking. He did not jump out of the window. On the second day, he purchased another 10 shares at $800 per share. And on the 6th, he went in, purchased another 10 shares at $750 per share. So at this point of time, he had a total 30 shares. Averaging price he paid was $839. So then he waited. He has patience. On February the 19th, which is yesterday, finally the stock price went up again. So he finally sold the 30 shares of Tesla at $939 per share. It wasn't the highest high, but it's high enough. So he made the profit in half a month, $939 minus his averaging price, $839 times 30 shares. He made a very good $3,000 profit just because he used the dollar cost averaging method down. So he doesn't need to wait until the stock price went up beyond $968. He still can make the profit and then get out of the trade much ahead of time. Second person, although he purchased the 10 shares of Tesla stock on February the 4th at the highest high, $968, but he did purchase 10 shares back in October 2019 at $300 per share. In January 2020, he purchased another 10 shares at $500 per share. He saw the price gradually going up and up and up. Finally, February the 4th coming, he thought the price will go above $1,000 per share that day. So he purchased the 10 more shares at $968. But soon he found out he was wrong. That was the highest ever Tesla stocks went. And then it crashed at the end. At this time, he has total 30 shares of Tesla stock at average price of only $589 per share. He saw a lot of people are forced to sell at the end of the day on February the 4th. He wanted to protect his profit. So he sold all his 30 shares of Tesla stock at $850 per share. So the total profit he made was very handsome, almost close to $8,000, $7,830. I just use this example to demonstrate how dollar cost averaging can save a lot of traders from their trades in many markets. Doesn't matter the price going crazy up or even crashing down. Dollar cost averaging method is actually the best for the long-term investors, because they can buy stocks or ETFs when people are selling fearfully. They can score a nice price and setting themselves for long-term gains, because in the end, the market tends to go up over time. The dollar cost averaging can help long-term investors to recognize that a bear market or correction or downturns, actually they are great long-term opportunities rather than threats. Like today, our market went down. Dow went down minus 128 points. NASDAQ minus 66.21 points. S&P 500 went down almost 13 points. You can see all these negative percentage, right? Compared to my portfolio in one day, I was a little bit better than the market. Actually, I have 3 accounts, a taxable account, Roth IRA account in one day. You see, a little better than the market. I still put in my dollars in cash into work. I put almost $300 for each account and purchased different holdings at different prices. For traditional IRA, I had 6 buys, $299.97. I total have 8 holdings in this account, so it bought 6 holdings in this account. And then for my Roth IRA account, it had 43 buys. I have total 47 holdings. I allocate about $300 to buy at a different prices for different stocks. You see all those dollars and cents. I just put in the order. The robo-advisor does all those calculations, and then so I bought it because I'm a M1 Plus member. which means I pay price to be a plus member, of course. So I have 2 trading windows. For those of you who doesn't really use M1 Finance, they have 2 trading windows. One is in the morning. I'll show you. One is in the morning around 10 a.m. One is in the afternoon about 3 p.m. So as a plus member, you can have 2 trading windows. If it's a regular member, you can use 1 trading window, which is in the morning. It's not bad anyways. So for those of you who wants to join M1 Finance, the best online robo advisor, I have a link down below for you to join. When you click on my link, you can get a $20 referral award. You cannot get it when you sign on your own. All right, you need a referral link. For my taxable account, I also put in about $300 order to purchase different stocks at the different prices. You see 37 buys. I have total 52 holdings in this account. However, the other holdings they didn't buy is because they outperform the percentage that I assigned to. The robo advisor is so smart, you don't have to give any order. They will not let you buy any stocks at a higher price. They only buy it when it's below the percentage you assign to. It purchased all these shares at the different prices for different stocks and ETFs that I'm holding in this account. In conclusion, dollar cost averaging really can help investors to avoid mistiming the market, to take their emotions out of investing. And it can help greatly for traders to get out of their trades much easier. If you liked today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.